Hello everyone. Today I'll discuss one of the fundamental issues that every trader has, especially when he is starting off. What is that issue? That is the fallacy of trying to find out winners all the time. We think that if we can win all the time, or if we can find some source from where we can get an information wherein every trade would be a successful one, that is the only chance to get rich or only chance to generate returns out of the market. And that is the mistake that I'm going to show you with an example, a live example, that this whole process of thinking is a mistake itself. So what can we do? That also I'll discuss, but I'll begin with an example. What do we do on a day-to-day basis? We try to find some technical setups which gives us 100% accuracy. I would be very honest, nothing such as that exists. Every setup will have its problems, every setup will have its drawdowns, which you will find when you trade for a certain period of time. Initially it might look very promising, or paper trading might look very promising, but ultimately you will find that that is a mistake. Now I will show you one example. How does it work? So I'll show you one sheet wherein I have enumerated certain random trades which we have bought, let's say, at a price of 100 all the time, and sold it at different levels. These are random figures that I have just given an example of 20 trades. So if you look at all the 20 trades, in each case the example buy price was 100, but we have sold it at different prices. You will see that the first 12 trades that we have done, all of them are losses, and the last 8 trades are at profits. So how many numbers of win we had? We had number of wins as 8, and number of losses we had were 12. So looking at this whole chart, you will feel that this is something that has not gone well for me, right? That is where the mistake is. If I show you the results of the entire 20 trades, that what was my net result out of these 20 trades. So what I will do is, all my gains and losses, I'll sum them up and see what the net result is. Ultimately, this is a gain of 20 rupees on the entire 20 trades taken together. Now what happened over here? We lost more than we won. So the whole thing, if you look at it, I only had a 40% winning ratio, yet I ended up with a net gain. What did happen? If you look at all my sell prices carefully, they are between 95 to 100, right? And if you look at my selling prices of gains, they are between 105 to 109. So what is the conclusion? In each case, I lost very little. In some cases, the max drawdown in trades was rupees 4, if you look at all the trades here. Whereas whenever I gained a significant amount. So ultimately, when you took all the trades together, I won a total of 20 rupees. Whereas if you take the number of instances of losses and wins, I lost. I only won 40% of the time, yet I made a return. This is exactly what we need to do in trading as well, because we will never have a system which will be 100% correct, or which will give us returns 100% of the time. So what do we need to do? We need to limit our losses. So in this case, so let's say you take a trade almost hypothetically every time at 100 rupees. You have to make sure that you lose only between 1 to 4% or 1 to 5%, not more than that. You do that, and if you end up gains only 40% of the time, and you write that quite well properly, see what you will make. You will make good amount of returns on those trades, and with 40% ratio, you can make a net return. And that is what your objective as a trader has to be. You have to ultimately make money. You don't have to be right or wrong. You can be wrong 60% of the time and yet make this money. So the entire exercise of technical analysis that you need to do is, you need to be a risk manager. You have to manage your risk well. You have to manage losses in a very limited way. You have to limit your losses. And when you are gaining, just write them properly. So that is why whenever I make any videos or whenever I give any suggestions, I insist on a risk reward ratio of 2:1. Why is that? Because whenever I am winning almost twice my losses here. See, whenever I am winning over here, I am making twice the money that I am losing on a single trade. And hence, if I have a 2:1 ratio, even if I win 33% of the time, I will be absolutely neck to neck. And if I win 40% of the time, I'll be making 20 rupees. And let me tell you, if you do your analysis properly, you can easily win 55 to 60% of the time. So see this sample. If you win around 55 to 60% of the time, and if you limit your losses, and if you can gain rewards twice, almost in the range of twice the losses that you make on an average, you can make very good returns in the market. And that is what you need to do. You don't need to chase any tips or recommendation. You don't really need to go after people and ask them what will be the next big thing. Only thing you need to do is be very, very consistent with your trading risk. What you need to do, you need to try and find setups where the risk is very limited, very, very limited risk, maybe 4%, 3%, 5%, and the potential gain that you are having around in that setup is around 6 to 10%. Keep milking this, keep doing this. Every time it won't be perfect, but keep doing this over a series of time. Analyze your next 100 trades. In the next 100 trades, take my words, you will make a return of about 15 to 20% every single time. Every single time we will do this. Next 100 trades, have a target of about 10 to 15% using the methodology that I am suggesting you, and you will win every single time. So the fundamental mistake that you make while you are attempting to trade is trying to be on the winning side all the time, trying to be on the right side all the time. That is not the aim. The aim is to, whenever you are wrong, you should be very, very minutely wrong. Whenever you are right, you should be right in a good way, almost twice the risk that you are taking. You should have those gains in mind, and ultimately you will be a winning person. So that ends the series today. We will come up with more such videos like this in the future. Thank you.